There we go. All right, guys, I'm just starting the recording now. Unfortunately, didn't get any of our initial banter there. So
it's probably a good thing.
Probably a good thing, yeah. So welcome. As I just mentioned before, make sure you jump on the chat and join along. And if you have any particular Q&A to direct to us, put it on the Q&A. Thanks, everyone. I'm really looking forward to this session today. If anyone was on it, I think we were doing it back last time in around February, was it, Laurence? Yeah. So I actually flew down to Lawrence's office in Sydney. He's got an amazing office in McMahon's Point. That's correct. Looking over the Harbour Bridge and in particular
Lavender Bay.
Yeah, Luna Park and everything. It's amazing. It's a great spot, and I can't wait to get back down there. Unfortunately, at the moment, we can't get down there because of COVID. But we certainly, I know, our office is Lawrence's office when he's up here, and vice versa. So I cannot wait to do that. So thanks, Laurence, for joining. So I think that's a bit of an introduction. So I've got Laurence Barlow from Credit Reboot today. This is a partner that, and you can see Eventum, Optimum, everyone knows EO, who provides business turnaround, mortgage registration, PPSR registration, trust deed stamping into the LightYear doc member base, and a number of other services. Well, Credit Reboot is a partner of Eventum Optimums. And I mentioned I was on the BGL webinar on Tuesday, and I was talking to that because about a number of non-LightYear doc members and users were talking to and saying how important, in particular, no, we've got I believe the best documents in the market, but also the best strategies and support. But what's really the strong strength behind LightYear is our partnership and our solutions that we provide. And we've got some sister entities such as ILA and EO, but then our other strong partners such as Abbott, and sister companies such as Abbott and Morley, but also others such as Change GPS, BGL, and others that we do deliver these weekly, so on a fortnightly basis. So I've got Laurence today from Credit Reboot. He is an industry leader in his space, which we'll talk about in a sec. So welcome, Laurence.
Thanks for having me.
As everyone knows, these are I just mentioned, these are my fortnightly partner solution series. I won't go too much into that. This is some of our partners in our ecosystem. As you can see, we've got the partnership being EO and Credit Reboot, and EO have a wholesale partnership, and we're working closer and closer together, aren't we, Laurence? I guess on a weekly basis, we're utilising lead sources into both of our websites. We work closely on clients, which we'll talk about a little bit further on. But it's interesting because EO, and I know Rod and I've talked to you about this, but EO which has worked predominantly in the business turnaround space. We often, we're dealing with business issues and business problems, whether it's debt, credit negotiations, restructuring, insolvency. And traditionally with those, you've got personal and individual problems. And traditionally EO, until we met Laurence and we went, hey, what a great solution. And we both did a bit of DD on each other over, in the office, and also over a couple of bottles of wine, which always helps. And over time, we worked out, okay, these guys are fantastic. The solution they provide to the market is amazing and cutting edge, in particular in relation to their application, which we'll talk about soon. But, we sort of, EO used to do it, a bit of the individual stuff ourselves, but we've now got a solution that we can actually mirror in together. And you also provide, because often we'll come across business problems. And of course, the individuals or the directors are going to have issues because they, generally if there's a debt problem, then they start having debt problems personally as well, don't they?
Yeah, absolutely. Personal guarantees are a real way that many business owners will say, okay, I've got to go. We've got to wind the company up, and they'll ignore or would have forgotten about the array of personal guarantees that are out there that will come back to them. So we can help them with that as well.
No, definitely. And we're big at EO, which we have a number of checklists that we provide to our accountants and advisors, and for themselves and for their clients. And one of the big things we're always big on is, and one of those checklists is make sure that you keep a register for your clients of all their personal guarantees. You see a lot in construction where they've got to take out trade accounts and everything, and the director puts a personal guarantee down, and you could have 8, 9, 10 out, and they just don't know about them, and they don't remember them. So we're very big on, in relation to keeping a register, keeping that register up to date. So when your client does enter into if it's a finance facility or a trade facility, they actually note that down, and then they can reference to where they've saved it as well. So it really helps when you're reviewing and looking at everything, because otherwise all these things come out of the woodwork from everywhere, don't they?
Yeah, absolutely. And, the validity of it, particularly if they're older accounts, the validity of that personal guarantee is, with new terms and the way that the trade provider has introduced aspects or appendices or whatever to the guarantee, will often null or void where it was. And so what we do is we have a process that we go through where we do from a personal side that often pulls directors into the consumer space, which is where we specialize in, and we then leverage those breaches inside of that world to negotiate a better outcome for them after the debt's been settled, or after the debt's been negotiated from a commercial perspective. We'll step in and handle it from a personal perspective.
Yeah, fantastic. So as well, because we're leading into that, but today's webinar, Anusa did a great flyer that went out, and we called it the Great Debt Escape with Credit Reboot. And I really love the flyer. I like that pose you've got, sort of sitting back and looking relaxed there too, Laurence.
Yeah, that was. I think that was actually in Manila in the Shangri-La, and I
spent many a time at the Shangri-La.
Yeah. I'm not sure how many wines were in front of me at that point. However, you're right; it was pretty relaxing.
A great Chinese restaurant in the Shangri-La.
There is, yeah, absolutely.
So we're going to be talking about, as I said before, individual clients with personal and mortgage debt, what can be done. How does the Responsible Lending and Consumer Credit Act play a role in this? And this is really important because Laurence and his team has developed an application which has an amazing algorithm in it that actually, and I won't steal his thunder, but actually reviews the different legislation, different acts, so the Consumer Credit Act, and looks at responsible lending and everything. And he'll talk about it soon, but the amount of percentage of breaches that tend to come out from finance that people have entered into. And we're not talking about our bottom dweller personal financiers, are we, Laurence? We're talking about from the top down in relation to breaches on a constant manner. So how can clients improve their credit score? We'll talk about that. How business and individual debt goes hand in hand. I mentioned that briefly before, and just an update for those who don't know in relation to the EO mortgage and PPSR process, and also trust deed stamping. So Credit Reboot, Laurence, I'll hand it over to you. How about you talk a bit, and I know it's from this slide and the next one, in relation to a little bit about the history from yourself. I mean, you've come from what you call the dark side to the good side of the force, and I really love that story. You have been seen. You are quite famous, almost as famous as me, not quite, but on Current Affair, Channel 9 News, 7 News, and because you were the first in this space in the country, basically, weren't you?
Yeah, exactly. And in fact, I think largely we probably still are. So from my perspective, as you're joking, Michael, I was on the dark side. So I had a substantial debt collection agency. We collected for all the major telcos, utility companies, and all the major banks and finance companies. So the big majors, along with Citi and American Express and other second and third tier collectors. So we had about 500 collectors in total collecting money. And some years ago, I decided it was a good idea to move from the dark side, as the joke goes, to the light side. So after we cut up and sold the business off, I was lying around the beach trying to work out what to do, and developed an application that allowed consumers to repair their credit file from a mobile phone. So for my sins in debt collection, what I learned is that once a credit provider or a debt collector get hold of it from a collections perspective, there's always compliance breaches. Now, they don't do it because they're particularly evil or they're out to get you. It really is that whole world of compliance is seriously complex and very expensive to remain 100% compliant. So what often happens with lenders is that they'll do the best that they can and if there's some mistakes, well, often they very, very, very rarely get picked up. Or you can look at your credit contract all day long and have no idea where the compliance breaches are. And yet when we get our hands on it, what we do is that we run it through the software that we've developed. So we've morphed it entirely from credit repair to include, and this is the larger part of it, to include debt negotiations and negotiating debt settlements, either on the rate, on the fees, and on the debt itself. So I'll just explain that a little bit more. Michael, is that the right thing to do there?
Yeah, definitely. Explain that a bit more. I mean, and I and a few people may or may not know this. I've been a CFO role I've run. You know this, Laurence. So I can put my hand up and tell you 100% univocally what you're saying is correct. It's I've as one in one of those CFO roles, I ran I would have been about $100 million consumer credit book, and hence why I was talking about the Philippines. We did offshore to Makati, and I know, we had all our processes in place, did all the compliance and everything, but we got, whether it was in relation to documentation or our collection process. I mean, because as you can state, there are certain timings and certain documents that have to be provided, and there's a certain amount of calls you can make, and you can train and keep an eye on teams as much as you try to, but it doesn't stop them from moving outside the human behavior in relation to what they do and breaching things.
Yeah, exactly. So what we find is that across all of the laws and regulations that go there, there are large pockets of responsible lending, National Consumer Credit Protection Code responsible lending sections that are consistently breached by not only mainstream lenders, but also, second, third tier, and payday lenders are a big culprit, but certainly the mainstream lenders as well. So what we do is we run that through the software. The software does hundreds of checks on the credit application, what should have been done as far as everything from their home expenditure matrix calculations through to serviceability assessments, just an extraordinary amount of checks on that. And then we find the errors. Now, the breaches are we're not talking about spelling mistakes, or we got they got a street address wrong or something like that. We're talking about very serious compliance breaches. The system prepares legal letters that identify the breaches, along with the supporting legal precedents that shows that the courts are on the side of the consumer with that particular breach. Those letters go off to the credit provider, and the credit provider will then go into a process of normally debating with us how accurate or not it is, or how significant the breaches are. Many of the people in collections have not been exposed to this level of compliance errors that we find. So we find that we have to go through an education process with them, which is all very important. So we do that. Now, fundamentally, we're not saying, and I think this is a really important message here, we're not saying that the lender didn't give the money to the consumer and they didn't spend it. What we are saying is that if the credit provider is holding the consumer to the full compliance of the contract, that means they want it all paid back at that rate on that time with those fees, and that contract's underpinned by legislation, all the different codes that underpin the contracts. And they're holding the consumer to the full compliance of that. It is fair and reasonable that they are held to exactly the same standards. And when they've breached those standards, that is the basis of a conversation. That's where we move into negotiation mode. We reduce the interest rate, the fees, and the debt. And, to be open at the moment, I don't think we've got anyone on our books at the moment that doesn't have a debt negotiation that's better than 50 cents on the dollar. Often we get lower than that. And in some cases where there have been very substantial breaches that the consumer is largely unaware of, where there's been very substantial breaches, then the debt's waived. But but certainly, we're operating around about the 50 cent in the dollar. We protect your credit file. So there are a few things. I don't know if you want me to keep rolling here, Michael. Yep. Okay, so there are a few things that happen if you decide to subscribe to the service. almost within the 24 hours of signing up for the service, we will notify the credit providers that we have some debts, that we're acting as the consumer's representative or the small business owner's representative. Therefore, hands off, they've got to talk to us, not you. So they're not, if they call, write, or text, they're breaching compliance, they're breaking the law. They've got to talk to us. You need to stop paying for the fee because you need to stop paying the bank or the credit provider because the debt is in dispute. And under the ACCC debt collection guidelines, a particular section, when the liability is disputed, the credit provider must suspend collection activity and must suspend any credit reporting activity as well. So there's nothing going to go onto your file. They do, if something does go on, it is a mistake and a breach, and we have that removed.
And often they do, don't they? They do make that.
Yeah, we have found that actually. It's a phenomenon that's happened after COVID, and I can talk a little bit about the extraordinary collection behaviour that's been happening as a result of, I guess, there's been a lot of debt holidays. And if you can imagine, there's $1 on someone's desk and there's 4 or 5 credit providers all want the same dollar. So they tend to be ignoring the regulations and running at it to get that dollar.
They want to be first in, don't they?
Absolutely. Yeah.
May get the dollar.
Yeah, everyone understands that in debt collection. There's only, particularly now in this, what I would term, I know it's a pandemic, but you could almost call it a financial pandemic because it's just such a substantial weight around a lot of business owners.
Yeah, I know ATO's gone into overdrive in terms of they're getting more and more, but in terms of collection activity, and they were on a moratorium, I guess, during COVID, not to be so.
Yeah, no, absolutely. And the first day of spring, CBA go back to, they made that announcement a month or so ago. I'm not sure it's going to make the front, the cover story on the news. But anyway, on the first day of spring, CBA go back to foreclosing on homes. So there's a very aggressive move. We're seeing, I've never seen this at this level, where credit providers are really moving on consumers. We've got a couple of people that have been on these debt holidays, which we don't support, because all that happens is that you can ring the bank up and say, look, I've got a problem. They'll put you on a 6-month holiday. At the end of the 6 months, you'll come out, you'll be 6 months older and largely deeper in debt, and there's all that interest as well, which I guess is the deeper in debt part. We had a client the other day, they had a $22,000 card, which they put on hold over a 6-month period. The bank has rung up, and one of the majors has rung up and said, okay, the debt holiday is off. You've got to go back onto your payments and you need to catch up. So you need to pay us the $5,500 that you hadn't paid us over that period of time. And we want it now, or we're starting debt collection activity. We see a bit of that. Our customers, people who we're representing, we shut that down straight away, clean that up, and talk to them about how we talk to the credit provider directly about how they need to adjust their approach.
Yeah, it's interesting what you said before in terms of getting them to immediately stop payments. So I know at the EO side of things, Rod and I, it's something we butt our heads against in terms of with clients. Sometimes we'll meet with them, put the strategy in place, and we say, look, guys, you need to stop making payments. And they're like, oh yeah, we got to pay the HO. You need to stop making payments. And then a week or two later, we'll find out that made a payment. We're like, we're trying to negotiate with these guys and say you have an inability to make payments. You keep making payments to them. Like,
you're not
debits. You need to stop. It's not helping their position.
Yeah, you're not helping. You're not helping at all. No. So sign up for the services. We freeze debt collection activity. Your file, they're not allowed to mark your file. If they do, it is a breach, and we'll have that taken off again within a week or two of finding out about it. So they're not allowed they've got to deal with us. And it's important that while the debt is in dispute, that we need to, you need to stop paying, because you're not helping. If you continue to pay, they're not going to pay any attention to us at all. So that's part of the process. We then go on an arm wrestle with them for a few months. From the consumer's perspective, it doesn't matter. They technically cannot add interest to the debt because the debt cannot be calculated. Remember that we've identified a range of breaches, and those breaches means that the consumer's been put in, has some sort of a debt anchor, or arguably been put into some sort of a debt prison they shouldn't be in, which means that the rate and the debt itself needs to be adjusted. Occasionally, people will get letters from the bank saying, look, we understand you've suspended your payments, but we're still adding interest. Those interest payments are off the table in the negotiations from day one, because you can't add interest to a debt that you actually aren't sure what the amount is. So if we stop negotiation at 50 cents in the dollar, whatever it is, it's a very different outcome. So no interest repayments can technically be added. Your file can't be marked. Debt collection activity, we take that on, or actually they've got to stop that, and we take on the negotiations. We eventually get all the documents from the bank. We don't want much in the way of documentation from the customer, because
this is really important, isn't it? This fact,
yeah, and this is the point that most I think people in our sector miss. Most people in our sector will do hardship, so that the client will be required to face up with a statement of financial position, kiss the boots of the banker, plead for, cut me a deal, help me out. We don't do that. In fact, and
Laurence, just jumping in, that's actually what the credit providers want you to do, don't they? Because they have it as part of their process and policies in terms of hardship. They'll we'll go through and submit a hardship claim. They would prefer us to do that than to deal with someone like yourself, wouldn't they?
All day long. In fact, that's absolutely what they want. They want to be able to say, we don't have to report to APRA. We've got a non-performing loan because it's in hardship. We've got a statement of financial position regarding hardship. We can mark their credit file that they've been in hardship, and we can put them on a debt holiday, and the end of the debt holiday, and we can add interest all the way through that process. So there's a range of reasons why hardship is very good for the credit provider. If you're in hardship and you need that sort of help, then there's a lot of organisations. The Uniting Church have a very good free service for that type of thing. Having said that, that's not the business that we're in. What we're in the business of is identifying why the client was placed in that debt prison, which they shouldn't have been in the first place. Over-enthusiastic credit providers giving more money than they should have, and then let's negotiate. Let's cut a deal from there. And yep.
So I know we spoke about it last time, but I actually had one, and it was before I knew you guys. I spoke about my sister-in-law, and because of my former life in consumer credit, and she came to me and she said, "Look, I've got a fair few debt problems, and they won't stop calling me, and all these private numbers." And so then they kept calling her, even when I said that I was representing her and provide third-party authority, which we know that's a breach as well.
Absolutely.
And, but it was our famous red-coloured Big Four bank that with the big W, upside down M.
Not naming anyone.
No, not naming anyone. It issued her with 3 credit cards, I believe, and each one was meant the second and third ones were meant to pay out the other ones, and obviously they should have closed them, but they left all 3 open. And she and other credit providers, meanwhile, kept providing her more and more credit. So I just went at them with responsible lending, and Westpac wrote 2 of the credit cards off completely, even though, as you said, they'd rightfully given her the credit. She'd spent the money and on whatever young girls like to spend money on, and I'm sure she racked up a nice debt. And they actually wrote off to 2 credit cards after I said, look, show me send me the review you did in relation to her living expenses, how you actually provided her with this level of credit. And then they turned around and basically said, this is too hard, we're writing it off.
Yeah, look, that's exactly the case. Some years ago, the banks used to do unsolicited credit limits on credit cards. So you would often get phone calls from, for example, not naming anyone, but our friends at Citibank would ring up and say, "Mr. Barlow, congratulations, you've just been pre-approved for a platinum card. Here's an extra $20,000, and if you take the card today, we'll give you a free bottle of wine." I used to get those calls pretty regularly, but that's literally unsolicited, and the government stepped in and said, "You can't do that anymore, guys." And so what they did to avoid that problem is that they just simply tend to approve cards at lower levels, $5,000, $6,000 levels. And so you'll end up with a card from Qantas, Virgin Money, and Citibank, and that's all Citibank, and you've got 3 different cards. And that's how they sidestep that particular issue. In that situation, we always find very big breaches in responsible lending, specifically around serviceability assessment. They've almost never done anything haven't done the process or haven't followed the process they should have to assess whether the consumer is able to pay that debt back.
Yeah, we've got a great question there in the chat. Laurence has said, and I believe I know the answer, but I'll give it to you from Christine. It says, if a loan was in existence, and you see this a lot, loans in existence been sold or removed to recovery agency can still be scrutinised by Credit Reboot. And we often see it, that they've tried to collect the debts, become too hard, and they flick it or on-sell it to someone.
Yeah, look, that's a beautiful situation. In fact, what we like to see is the credit providers sell the debts. As my life on the dark side, I was a debt purchaser. I'd purchased many larger books of debt with face values in excess of a couple of $100 million, and I can tell you that we would often buy $20,000 credit cards for 2 and 3 cents in the dollar. So if it goes to a debt purchaser, the debt purchaser or the debt collector has inherited all the rights to collect that debt, but they've also inherited all the obligations to prove that the debt was in fact, or the credit facility was in fact put together in a compliant way. 99 times out of 1,000. They very rarely can do it, and that's a good situation. We can immediately go to negotiate on that type of debt and get probably a better outcome. So yes, absolutely.
Because they inherit all the original documentation and everything, don't they?
So very rarely they have anything of any substance. So it's a great one to negotiate on.
Yeah, fantastic. I just had your dark side up there as well. So where did you get the idea from? I mean, in terms of Credit Reboot, and obviously you talked about the dark side, and and behind this great app you've got, the application's amazing, and I know you're going to develop it a lot further, but it's
yeah. So really, I'm kind of repeating the story a bit here, but I saw I know what goes on in the boardrooms in the credit departments, the larger lenders and things like that in the collection side. And I could see there were substantial breaches there. They do work a very thin corridor of compliance, really, compared to what they're required to do. Yep. And on the basis of that, it seemed to me, and the consumers are so disarmed. Everyone's had the experience of trying to talk to a bank about an error or get a correction made, and it's spectacular in how painful it is. And so, it just seemed to be a real need that consumers needed to, someone needed to step in and help. Financial hardship wasn't always the case, that people just put in debt prison. So that's how we engaged. I started doing this sort of on my own with a couple of small developers. We've now moved to a larger team. We've got a constitutional lawyer on site to help us go through with he's actually full-time, goes through the laws and looks at the changes. We then convert that into code, and our operators. All of our debt negotiators, I probably can say this, all of our debt negotiators have been on the other side, so they understand what happens. They're not always invited to the same Christmas parties they used to go to, but I think they're all happy enough with the new role.
Yeah, John Gowing is a big fan of LightYear and supporter, and always asks the great questions, but he's got an interesting one, and I can actually answer in part this, because this is John. It actually happened to me. Said, are there sanctions available against a debt collector who, I'll just scroll back up, sorry, I just lost it, who falsely registers an adverse record on a public register that is arising from a fraudulently created credit card, so an unsold debt stat provided of innocence, but still demanding the client go to the trouble of making a formal statement to police. They won't let go. I'll just, before Laurence jumps in, I'll actually tell you my own situation there in brief, John and everyone else. I actually was in the process of doing a development, and at my property, I was putting in a quite a substantial outdoor entertainment area. It was about $250,000 with the pool and bridges and stuff like that. And it's partway through where I was going to start. I'd been self-funding, and then I got a facility through Suncorp, and that which had been approved. And I was about to do the first drawdown, and one of my managers at Suncorp I know quite well, I've played a lot of hockey with, he said, we can't draw down, Michael. There's been an adverse thing reported on your credit file. And I said, what are you talking about, Steve? I knew my credit file was clean. And I don't know, mate, you'll have to send it through to me. And anyhow, it had I started off, I was looking at it, I go, that's weird. That's a different address. It was down in Parramatta, lived on the Gold Coast. And it said I had 5 kids. When I have 2, so I was working. It had the name of the place I was working at, but it didn't have nowhere near the salary I was on in the CFO role, and also didn't have. And there was a whole heap of other details. So then I get down, and there's a Virgin, it might have been Virgin Amex or something, had been opened up by this person in Parramatta, whose address and phone number was now on my credit file, and it was only it was $1,000 or $2,000 card, and they had racked it up, not paid a cent, little to known to me, and obviously everything was going to them. And I went through an interesting process, because I know John said about the police. I actually then called up AMAT or Virgin and said, look, this is not right. I was called actually, the credit reporter up and said, you have to remove it. It's false. They said, well, you have to go to Virgin or Amex. And so I spoke to them and said, they go, you'll have to file a police report for the fraud. So I jumped in my car from the office, drove down to Robina police officer and lined up for about half an hour. So I'm pretty frustrated by the stage, get to the front. Yeah. And the guys looked at it and he goes, mate, we can't, this is a New South Wales police matter, because the guy who's committed the frauds from Parramatta. I go, what if he's in Perth? And he goes, he said, you'll have to go down to Tweed Heads and report it in person. I said, this is ludicrous, mate. What if it's at Hobart? So I've got to get on a plane. I'm the one who's had the fraud committed against me. So I had to drive down to Tweed Heads, spent half a day there filling out reports with supporting documentation to lodge it. About a month or so later, I get a call from the police. They go, we've investigated. We've discovered it is fraud, and then lodged it back, and it got removed off my credit file. Yeah. But it just shows you how easy, especially with online credit cards and everything. It's the best Ponzi scheme ever. I could jump on right now, and I've got your details, Laurence, your date of birth. Yes. A little bit, and open up, especially if you keep it at that low level. Yes. And bang, got myself a couple of credit cards. Yes. Yes. Yeah. So as John's saying, are there any sanctions against a debt collector who's collecting? On against a false register, or are they collecting on something they don't know is false? So
just to answer a couple of those questions, if you ever have that sort of a problem where what looks like that was a fraud situation, ACORN, which is, I'm trying to remember what it stands for. If someone on your audience will probably know, they'll take the police number online. So it's ACORN, Australian Cyber Something Network, and you can Google that. They're in Canberra, and they'll give you a police file number. You get that, you go to your Equifax online. I can provide a letter for everyone in your audience if you like, which is just a blank letter. You can email that off to, remember there's 3 credit reporting bodies. The one you really need to be concerned about is a thing called Equifax. They hold about 90% of the market. And I can give you an email if you like, Michael, and you can share that with the listeners. There's a link. They click that, they fill it in, they attach the ACORN police number, and you don't have to go to Hobart or Perth or whatever it is.
Yeah, well, I actually contacted one of those, and they actually said I had to go to the police. This was a long time. I'm talking quite some time ago. But
I might have changed.
Yeah.
It looks like that it's a different website now. So it's cyber.gov.au.
Okay, right.
I've just put it in the chat as well. So they've replaced Acorn on there. So you can have
I've got a lot of runs on the board here, Laurence. Don't forget. So it's probably 5, 6, 7, 8 years ago.
But to answer your to answer the debt, the debt collector will often to share a bit when we would purchase a book of debt, let's say, once again, from our friends at Citibank. I'm not sure if you know this, but Citibank have been chased out of Asia Pacific largely, and they've gone back to investment banking. So they've pretty much closed their consumer card business down. And there's I don't know if this is still a rumor or it's substantiated, but NAB will pick up much of that book. The smaller cards that have been non-performing or been on debt holidays will almost certainly be boxed up into a warehouse, into a large ledger, and they will go out to the market where debt purchasers will bid for that. So, all the usual suspects from, Credit Corp, Pioneer, Collection House, all those guys will bid for those books. And you might see if you've been on a debt holiday for a month or 2 or 3 months, you might see your debt sold off to someone there. If they do buy, it depends if you're sold. They'll get literally is this: you get a spreadsheet, you get the person's name, phone number, the debt and the arrears. You don't get anything else. There's no file that comes over, and then they will ring up and attempt to collect. So they won't know whether there is. You do get scant notes at the same time, but they won't know if there's theft or fraud associated with it. If there is. The cyber guys are the best way to get the number quickly. And I will give you an email with the link, and you can get a free copy. You can lodge a correction and then get a free copy a week after the correction's been made, if that helps anyone.
Yeah, interesting. A couple of questions just popping up, and it's of course this is always the important the penny when the penny is drops. But in terms of how do you get paid? How does Credit Reboot get paid? And is the service expensive? And can it be put on a payment plan if the client doesn't have the upfront money? So there's two
Sure.
different people asking, but a similar sort of question, I guess, resonating is how does Credit Reboot get paid?
Yep. Yeah, so we depends on we have a range. I can talk about the types of debts that we negotiate on. So they're credit card debts, personal loan debts. They might be they'll be mortgages. So mortgages could be primary place of residence. They might be a property in a mining town that's gone underwater, and it's got to be sold, and the consumer's left with $500,000 underwater and that sort of thing, right? So they're the debts that we do. We'll take a client in. If we take a client in, we normally we try and look at debts above $10,000 largely, that credit cards, personal loans. They might be a motor vehicle problem. I've had a few clients where I've got the call urgently, and there's been a repo guy at the door trying to pick up the car. So I've had a chat to the repo guy at the door, and he's worked out it's in his best interest to keep his license to leave. So he's left without the car. That's not an uncommon situation. But in a more, so how do we get paid? So what we do is it's the number of debts that we're taking on, because each debt requires individual negotiation. We try and box them up. For example, if you've got 3 cards with your friends in red with the upside down W, if you've got that situation, they would like us to negotiate individually for each one. We can't box it up. So it's, so it depends on the number of debts that we're taking on, and also the size of the debts. But largely outside of mortgages, the return on investment is spectacular. So, the fee might be, and I don't want to tie myself into something here, because it really does depend. If you've got, 1 credit card versus 4 or 5 credit cards, there's a difference in the amount of work that we need to do. Even if
I don't think it's so much from fee. I guess it's how you actually get paid out of the process, and and then because everyone knows it's a bit. So how long is a piece of string? I mean, we obviously you deal with that, and for everyone listening, EO, we deal with the business side in relation to business debt, and not just business debt, but in terms of that pre-insolvency business turnaround, and then if they have to go into insolvency. But you know, and it depends on what the problems are and how big the problems and what the strategy is we have to put into place. You know, an EO turnaround could be 10,000, it could be 25,000, it could be 50,000. You know, it depends on what we're actually dealing with and what the solution is that we're going to get into. And that's certainly not Credit Reboot's cost. I'm just talking in relation from the business side of things that it all depends. Yeah.
So from our side of things, you know, you could, you know, 5,000 to 10,000 on a payment plan, no interest over a year. Sometimes they can take a year to settle these things. Is not an uncommon situation for unsecured debt. And remember, the payments on the debts are suspended, and so the payment plans are, you know, they're spread over a period of time. There's no interest on that. And when we get to the idea is when we get to settlement, which if we go through the entire process, and it can take a little bit of time, mainly because the banks will stonewall and stonewall and stonewall. And remember, they may want to sell your debt. If they sell your debt, that's a good thing, because we're back in debt purchaser land, and we know we're negotiating against a few cents in the dollar. If you know how to do that, it's a good outcome. Doesn't matter if it takes 1 month or 1 year to get an outcome. Remember that the payments are paused, the interest is paused, your file's clean, and they talk to us, not to you. So it's largely irrelevant. Can you get other finance? Well, of course you can, but if you know, you probably shouldn't be going back to the finance company that we're having a dispute with, because you know they're not going to send you Christmas cards or bottles of port.
Yeah, and there's another question there from Christine again. Said, when you talk outside of mortgage, does that also mean unsecured loans, which was previously secured by a mortgage over a property? You can negotiate on secured and unsecured, can't you?
Yeah, absolutely,
yep.
No problem whatsoever. So, yeah, so and we can negotiate to the point where if you've got property that you simply need to sell, and it's just its nose is above water, or it's, you know, it's $500,000 underwater, we will negotiate with their teams, with their repossession teams, up to allow, you know, all sorts of outcomes. So they'll allow you to sell the property. Remember, you'll get a better price for it rather than them fire sailing the thing. That will reduce the amount of debt. There might be a bit of debt left. If there is, we then drill into the compliance breaches, and that debt can be written off. It can be substantially written down. It can be put onto a payment plan. We always argue for a payment plan that has no interest, so you're paying the balance down. And when we're, you know, 99 times out of 100, we're successful with that approach.
Fantastic.
It's all about understanding the breaches and then leveraging those breaches to negotiate. We're not saying you didn't get the money. We're not saying you didn't spend it. What we are saying is if they're trying to hold you to the full compliance of the code and the contract, it's fair and reasonable that they are held to those same standards. If they haven't kept the standards, that's the basis of the negotiation.
Yatinda, we will share contact details. I'll talk about that shortly, and we'll send all of that out, and obviously we'll send the slides out after this as well. So you've got a couple of testimonials up there, obviously, yeah. Reboot and everything that everyone will see. And
we just had one which I'd like to have a talk about. We've got a gentleman on the far right, and he was paying an amount of money. I can't remember what it was. It was, you know, I think it might be quoted there at nearly 90,000 or something.
Yeah, 90,000, correct. Yep.
Yeah, and look, it was one of those zombie debts where he'd been paying the thing off for years and years and years, and just paying the minimum repayment, wasn't going down. And you know, I think he was paying for 15 years. Contacted us. We had a look at it, and there were holes in it you could drive a bus through. So we got on the phone, dealt with the credit provider, and they waived the entire debt. Doesn't happen all the time, but it does happen on occasions, particularly with those sorts of really long-term zombie debts that are hard to kill off. I think on the next screen too, Michael, we had a spectacular outcome for someone that had a property problem. And so we're not uncomfortable in dealing with, larger mortgage challenges as well. And, this is, I think this is an area which I don't know of any other debt management companies that come in at it from the perspective that we do. And I know that we've done a couple of joint projects with Michael and with Rod, and we've had some really good outcomes there.
Amazing success recently, wasn't there? There was outrageous, really.
It was great.
Yeah, it's good. It's fantastic. So, we're doing more services for those clients as well, which is great. So there was another question there. So does your fee also depend on money saved for the client? Is that part of it, or?
No, look, largely we work on occasionally where we've got something that's complicated, and I suppose this walks us more into the mortgage space where, might have several properties that are leveraged against each other, and then there's a cattle station included and some other, you can get into complicated situations, but most of the time, better than 95% of the time, it's a fixed cost. You know how much it is going in. We have an unusual guarantee. We have a 200% guarantee. And so if we don't save you at least double what you've spent with us, you get all your money back. Having said that, we don't have anyone on our books. We haven't had anyone on our books where we haven't done better than 50 cents in the dollar. So we're way in front of the guarantee. We always overperform on the settlements.
I know we had the technical problems from the office last time, but there were a couple of LightYear members that you actually helped with some of their clients already, which was fantastic. And I know a lot of people were really looking forward to hearing this again, this session. But what I was actually thinking about it last night a bit more, and we might have, we might do another update on EO and stuff coming up. And I was thinking we might even do a roundtable where we show how EO and Credit Reboot work together. And we might even bring Darren Fadot onto the table from the business and personal lending perspective and say, look, this is, do the full flow through and show how, the result of, and obviously Darren works with people who do have credit issues and not credit issues. And so we can probably work through some of those mechanics and what the result is by what we can do, and even do a few case studies around that.
Yeah, that'd be absolutely
bring right on stuff. Yeah, and
Darren's a great guy and easy to work with, and certainly if there's a barrier to obtaining or to helping someone in their wealth journey, then we can remove that. Credit card. Range of credit card problems, personal loan, or if it's a mortgage, let's get that cleaned up. Let's get the file cleaned up, and then let's talk about how to refinance back into good debt.
Yeah, and Darren, as I said, Darren is fantastic. I love how he workshop a lot of deals with him. He'd be the best broker and person I've dealt in that space in terms of business, and obviously they do resi and stuff as well, and personal finance. Well, not so much unsecured personal finance, but business loans, commercial property, residential property, and everything. But we'll line that up coming up. So
fantastic.
What have we got next slide? So there's some information there in relation to booking a call and stuff. We'll if ever anyone wants to contact, I'll send out the way to contact Credit Reboot and everything, and also on the last slide it provides information in terms of contacting EO. We, as I said before, we work very, very closely with Credit Reboot, and we work off each other. So anyone can send anything through to info@Eventum Optimum. We can pass those details on, but I'll also provide a workflow through to directly to Credit Reboot as well. I think you've got some information there on that as well too. I just thought I'd touch on briefly as well, and I know Laurence knows how important all this sort of stuff is, that EO, just for those who are listening and weren't aware, EO provides, other than their bread and butter is that business turnaround, pre-insolvency, insolvency, dealing with bankruptcy and all that sort of stuff, whilst we try and avoid solvency as much as possible in any bankruptcy events and work on behalf of the business owners, compared to insolvency practitioners who work on behalf of the creditors. Where the other thing we do, and the main thing that we provide also into LightYear docs, is our mortgage and PPSR registration and trust deed stamping. If anyone wants any of the flyers on that and the process and costing on that, I can send that out as well as part of this. But I just wanted to give everyone a bit of information just so that they knew that that service was available. But I'll send out, I'm not sure why the contact details have dropped off that slide. I'll send out the contact details and the way to contact Credit Reboot. It normally has that on there. So something's happened next to each of those things. And on after this, and I know Laura's just, before I wrap up and everything, she's just put in relation to our next webinar. I've got Joy Song from Tax Nuggets coming on, which is, I cannot wait. You probably should jump on and see that, Laurence. Joyce has started during about 4 months ago a service in relation to tax training, and she was ex-KPMG, and she's probably one of the funniest persons I've seen on LinkedIn, and she's delivers tax training in the most fun and friendly way I've ever seen. I'm actually a subscriber. As I said before, I only recommend and put forward solutions that I've utilized myself and tested. And she's, for example, she's got board games, she's got infographics, she get a snapshot of how it's done. Like, she's done this great, amazing thing, which is about to come to market on for her subscribers on depreciation, and it's called The Highway to Hell. And it's got all the new cool, and it goes through the test, and it's all on one page, and it's almost like a snakes and ladder. And down the bottom is is hell, whereas the normal depreciation up the top is heaven, where it's got instant asset write-off and a whole heap of other things, and you work through. It's just such a really cool way to train. She's actually going to be giving away some prizes for people who attend that in a fortnight's time. So we'll be doing out some media on that, and she's got a cool, fun way to present as well. She's an interesting person.
Sounds great.
Yeah,
really
I just love the way she delivers tax training and stuff. So make sure everyone jumps on that.
Yeah, I'd just like to add that she's also giving away for every person who subscribes to that webinar, she'll give 50% off for the first 3 months to Tax Nuggets as well. So it's definitely worthwhile, and we'll definitely have fun with that one. There's a game in there as well that we'll have everyone participating in as well.
There's going to be a game with a prize, and make sure you jump in and look at that, and it's going to be quite fun. So I cannot wait. I know Joyce is also going to be on the Beyond the Trenches Summit, which is coming up in September. So if anyone hasn't checked out that, make sure, and I'm sure Flora's put the link up on to have a look at. But I'm hosting a session with Grant on trusts, and whether trusts are the right structure for various different reasons, and you'll find out the responses on that. But it's over 2 days. Can't wait. It's going to be fun. It's going to be it's in effect replacing XeroCon, I believe, but I'm sure XeroCon will come back again. But it's going to be the best virtual summit you can attend over 2 days. But Laura's just put it up there. But so just wrapping up, if there's I'll just make sure there's no other questions. I'll obviously send out the contact details. Laurence, thanks for joining me today. Thanks for, you're certainly a leading expert in this space in the country, and, and it's a pleasure to work with you. And it's also a pleasure to have you on here today.
Thanks for having me, Michael. It's been, as always, it's been very entertaining, very interesting.
Thanks. Fantastic. Thanks, everyone.
Okay. Thanks, Michael.
Bye.
Bye.
Thanks, Laura. Thanks.
Stop the record.